We've got Suyash Chaudhary, who's head of fixed income at IDFC, joining us on the show. Suyash, to begin with, we've got something like 18,000 crores of bond sales by the central government today. How is the market expected to digest all of that?
Market so far has held up reasonably well. There is an expectation that a new 10-year will get announced for the auction starting next week, and that in turn would possibly bring down the yield curve somewhat. So against that expectation, market has held up relatively well. Also, traders had created quite a bit of short positions between Monday and Wednesday, which they would be unwinding now.
Suyash, afternoon, as the liquidity situation continues to remain tight, what is the range that you're seeing for the bonds?
Liquidity actually, like you said, remains quite tight, and even with the bond redemption of around 35,000 crores, which is due this week, we still think on a consistent basis, LAF borrowings will be in the vicinity of minus 85 to minus 125,000 crores. In that context, market does continue to expect that RBI will continue buying bonds from the screen. So we have seen all through April and now May, RBI has been perpetually there buying bonds from the screen. So there is an expectation that will continue, as well as possibility of a formal OMO announcement, which should keep broadly bonds in a range. So on the upside, we think broad range of 865 to 870 should hold on the new 10-year. On the low, we think maybe 840 or so.
Right now, Suyash, when the RBI cut the repo rate by 50 points in April, there was an expectation within the market that, based on the RBI's commentary, that you could possibly expect another quarter percentage point, maybe by October, at least latest by January. Is that expectation somewhere beginning to go away as we see, various factors continue to play out around us, things like, oil prices, the rupee going, down to 53 levels?
Yes, RBI's, future actions seem to be predicated on two triggers. One is they were looking at a substantial revision to fuel prices, which in turn would demonstrate that the government of India is indeed serious to contain subsidies within 2% of GDP. And two, they were anticipating that once these fuel price hikes happen, they may not lead to generalized inflation, given that pricing power with companies is relatively weaker. Now, both these assumptions, are still out there, and it remains to be seen whether one or both of them get fulfilled or not. Should they indeed get fulfilled, then towards second half of the year, one can reasonably expect, maybe one or maximum two more rate cuts. On the other hand, if inflation were to get generalized, or the government were to continue to delay fuel price cuts, then it may even happen that RBI is on hold for the foreseeable future. The recent rupee depreciation obviously does not help markets' anticipation with respect to inflation, as well as the PMIs reported over the last couple of days continue to show that both input and output price pressures are very much there. So at this juncture, I think most participants are at best expecting one more rate cut.
So, yes, just some of the other factors apart from inflation and the rupee depreciation, that the bond yields would be contingent on fiscal deficit. If you think that some of these concerns are going to continue to escalate, in that light, where do you see the yield on the 10-year bond trending?
See, over the longer term, and by which I mean, let's say the next 6 to 9 months, I would expect a reasonable quantum of OMOs to happen from the RBI. So, basis our liquidity projections for the year ahead, we are still getting an OMO number of closer to 1,20,000 to 1,30,000 crores for the full year. So it's more a matter of, when yields peak and then subsequently get triggered by the OMOs. On an average, I think, if one had a sufficiently long time frame, one should be a buyer at 860 to 870. That does not discount possibility of higher yields in the near term. All it says is that with a 1,30,000 crores of OMO number and the funding rate at 8%, it is unlikely that these levels hold when those OMOs start.